Tony is in Maple, Ontario, just north of Toronto. Go ahead, Tony.
Hi, good afternoon, gentlemen.
Hi there.
My question is about Walmart. I made a recent acquisition, near its 52-week low, and it's gone up nicely. Now, my question is twofold. One, what do you think the next 6 months to a year for Walmart? Secondly, as an investor, how do you know when to sell? Like, do you set a goal at the beginning, say, I made 10, 15%, and I'll get out? Or do you reevaluate periodically and say, hey, there's been a shift, a change in the, let's say, the economy or this company, and take it from there? What's your comment on that, please?
Okay.
Thanks a lot.
So, Tony, two great questions. The first question, Walmart. Okay, here's something I just want to pose. Since really the beginning of February, a lot of the most underperforming stocks in the market over the last year have bounced. Oh. And a lot of the strongest stocks have had a little pullback. And I think that there's a lot of people who feel that the price earnings multiple of the market itself is expensive. So that a lot of investors have tried to take down the number of expensive companies in their portfolios. Sometimes you get what you pay for, right? You're paying for a good quality company. It's generally expensive. Walmart, listen, is a good company. It's just in the wrong place in the industry, I think, long term. They are going to continue to be under assault from companies like Amazon. Now, they are trying very hard to build an online presence. They've made lots of tuck-in acquisitions, and they're having some success with that.
If anybody gets it right, you think it might be them.
Yeah, they're having some success. But my opinion is I don't want to tangle directly with Amazon. I would rather be a shareholder in Amazon long term than a shareholder in Walmart. So I think this is probably more of a trade than a long-term investment winner. So then the next question becomes an important question. How do you know when to sell? And look, I have my opinion, and we do our research, and we try to figure out where the numbers are going, what prices they could support. We look at the industry, see how it's doing, and we have a view. But then we recognize we may not know everything. It's good likelihood we don't. And so what we do when we make an investment is we identify a price below the price we're entering at. Let's say if we pay $20, maybe that's $18. And as a position works out, as we hope or expect, we'll ratchet that stop or that level up in behind it. We'll stay in positions as long as they work. As long as the numbers are getting better, as long as the sector or the industry is doing well market-wise, as long as price is doing what it should be doing, going higher, I want to stay invested. At some point, we get stopped out of our position, and we always give up a little off the top.
Okay.
But what I know is if I make 20 investments and I'm trying to buy things that are good, getting better, 3 or 4 work out way better than we ever hoped or expected. They're just getting better faster than we thought. 7 or 8 are pretty good and a bunch don't work. Our success is tied to our ability to hold the ones that work as long as they work. Maybe Walmart's got the answer to Amazon. I don't know. It's behaving well. It's had a great rally in the last couple of months. They seem to be doing a little bit better. It's not for me to say when it's too expensive. So I would use a stop loss. Stock's trading right now at $74. I would probably use a stop somewhere around 71. I use point and figure price charts to set our stops, but there's lots of different ways to do it. And I would ratchet that stop loss up as Walmart continues to perform. I think we're in a good market. I think that the stocks can do very well over the rest of the year. That might be the best approach.
Here's a tweet from Heather Waller. The question, BCE seems to be on an upward trend. Is this seasonal or something that we can expect to continue? And of course, BCE, the parent of BNN, because it owns Bell Media. And we are looking for the BCE Q1 numbers a week from now, Wednesday of next week.
Yeah, so look, the media sector has been doing well recently. And the telcos have had a bit of a bounce over the last couple of months. I put them in the camp, those less economically sensitive companies that people have gone to hide in over the last couple of months while they've been pulling back on the companies that are more economically sensitive. So first of all, from a sector perspective, I think there's better places to be. I would prefer to be in, specifically in media. You could look at like Comcast, for instance, or CBS. Both look quite interesting from a media perspective. or frankly, even a Netflix. On the telco side, I'm less interested because I think that if the economy is getting stronger, this group is not economically sensitive. It's not going to be one of the stronger performers. So I think there's better places to be.
Pretty big yield. I mean, I'm just looking here on Google Finance calculation. Royal Bank yields about 3.7%, whereas BCE is yielding 4.7%.
Yeah, this is fine as a yield producer. I have no problem with that. But at the end of the day, we're looking for total return, right? Yield plus some kind of capital growth. And I think this will be fine. There just may be other areas to focus on. We own T-Mobile in the U.S. T-Mobile shares are really doing particularly well. That's a way to play the mobile space.
Okay. Frank is calling from Winnipeg. Go ahead, Frank.
David, if you could tell me, do you still own Aclara? And where do you think the stock could go, to $14 or something?
Okay, so we really like the fiber networking space. So Aclara sells components into this space. If I had to choose today, I would probably choose Lumentium Holdings, L-I-T-E. L-I-T-E is the symbol, Lumentium Holdings. Okay. It's also in the component space. I think both can do well. Both have pulled back over the last couple of weeks as some of the more economically sensitive have pulled back. I think both could be purchased here.
And was that LITE? Was that on the Nasdaq?
That's on the Nasdaq.
Oh, okay. And sorry, are they?
So it's about a $2.6 billion company, and Oclaro is about a $1.4 billion. So they're both relatively small growth stocks.
No problem. We have to take a break. We're going to be right back with David Burrows of Barometer Capital Management. The topic, North American large caps. The number, 1-855-326-6266.